Hello, everybody. Thanks so much for joining in today. My name is Zanzi, and I'm the host of the Discord Showcase AMA series here at Polygon. Today, we got a special guest coming in from New, the People's Hedge Fund, Tom, the CEO. How are you doing today?
Good, thanks. How are you?
Great. Happy to have you here. So I always like to kick these off doing an introduction. So I'm curious, what's your backstory? What were you doing before you got into crypto, and how did you ultimately end up becoming a part of the creation of New?
Yeah, no, it's a good question. I think my background's a little bit interesting. Education-wise, I went into law, studied law for a few years, and thought that was where I was probably going to spend my career. But I've always, my passion probably outside of legal was always in tech and building new things, new projects, new ideas. Design is something I'm really quite passionate about. So I was fortunate enough, whilst I was still at uni, to found a open banking company in the UK. So that's where I'm from. I'm based in London. So yeah, we founded this open banking startup. We got our license and built an app, and then we were doing pretty well with that. And a company that was interested in sort of buying the technology that we've been building out. Reached out to us, and then we ended up selling the startup to them in April of last year. So that was sort of a great kind of entry into the space, and obviously we were doing pretty well with it. But then, I think as with many kind of fintech entrepreneurs, you look at what's happening in crypto and DeFi, and it was all very exciting and very new. So I started dipping my toe in the water, exploring, really learning about sort of Web3, smart contracts, how DeFi actually works. And that led me to meet some like-minded individuals, my other two co-founders. And yeah, we came up with this idea for really, it's New is, like we say, it's the sort of tagline is the people's hedge fund, but it's about democratizing access to better forms of wealth generation. So, where my other co-founder is from is like a TradFi kind of investment asset management background, and it's a lot of red tape in order to really be able to access good forms of asset management or good yield generating opportunities in TradFi. If you want to invest with a hedge fund, for example, in the US at least, you need to be an accredited investor, have a net worth of, normally surplus of 2 million. And the minimum investment amount is sort of outlandish. Well, it's out of reach of the majority of people. So we wanted to see what we could do to disrupt this in terms of crypto, and that's what got us started with New. And yeah, since then we've been focused on building mainly. I'm not saying it was the best time. Maybe we've sort of really started this at the start of the bear market, so that definitely hasn't helped us. But yeah, we've been building ever since, and we've been sort of doing some cool things, and hopefully I can kind of walk you through how it all works and what we've been working on so far.
Yeah, definitely. That's a great background story, and touched on my next question, like what inspired the creation of this. So, how when did you start building this out? When was this idea conceptualized?
So it was really conceptualized, I'd say, in late 2021, when the market was really, kind of nearing all-time highs, or pretty much there. Lots of money flying around, but lots of money flying around if you knew how to use crypto or how to use DeFi. And for sort of people entering the space, and a lot of us, probably yourself included, you tell your friends maybe about, hey, you should invest in this, or look at this, you can earn 50% here, or you can do this and that. And there's a real cutoff between people who understand the space and people who don't. So the first thing that we wanted to do was simplify being able to access yield generating opportunities in crypto. And we thought about how do we want to do this. And at the time, lots of the sort of other options were using fungible tokens. So you'd have to buy a token and then stake the token, and there was some kind of tokenomics behind it. We never really liked that approach, and I was more interested at the time in non-fungible tech, and what was being done with NFTs and kind of the new use cases that were coming out for NFTs. So we were thinking, okay, well, how do we bring this technology to the asset management industry? and what can we do with it that disrupts how the current system works. So that led us, well, sort of, as we were thinking about this, in what can we do with NFT technology. And the deeper we went in and the more we understood it, NFTs really boil down to metadata. So, people who are listening along probably do understand this, but just kind of as an explanation, metadata is the data that underpins your NFT on the blockchain. So, if you're on an OpenSea and you want to trade your NFT or see what attributes an NFT has, like a Bored Ape, that's all stored on chain, and that's what really sort of dictates the value. But that's on-chain data for an NFT, and we thought, well, can we repurpose this? Can we allow users to generate their own metadata, and then rather than it just being metadata that, say, describes the attributes of an image, like a Bored Ape with a gold tooth and a red hat and smoking a cigar or whatever it normally is used for, can we use that for terms of a contract? And I think that's what sort of went back to my legal, origins. Is I understand how contracts work, and contracts are very simple, kind of very template. They're kind of standardized, but you need people to input fields that suit them. So what we've done now with New, and I'll kind of explain to it as I share my screen, is we allow people to build an NFT contract, and it's an investment contract with us, with the fund. So we have a couple of products, which are, one is live and one is coming out very soon. The first one was a bond, and because we didn't have a token, we couldn't raise capital through having a token. So we needed another way of bringing in capital. So I'd say invented it, but not really. We just kind of used what was lying around and pieced it together, but was a bond contract. And we're expanding this offering now for other crypto businesses who want to be able to offer bonds on the blockchain through NFTs. So that's coming soon, kind of one of the things that we're working on. So a bond, for people who don't know, it's a very, very simple contractual agreement. It's, I agree to lend company or a government or a treasury X amount of money, and we have a fixed interest, fixed yield, and there's a time period on it. So at the end of the day, or at the end of the month or end of the year, I'm going to receive some yield back on my investment. So we built that out in the form of NFT. So what you can do if you go to new.fund at the moment is mint a smart bond. And I think our yield is 45% on this bond, which is quite good. And the reason behind that, I'll explain a little bit later. So yeah, you can select a product and then decide how much you want to invest. Now, one of the things and how we're trying to, disrupt the sort of broken wealth management industry is that minimum investments for good investment opportunities tend to be very high, and it excludes 99% of people from getting involved. And that's why you have sort of seen such an exponential growth in the wealth divide over the last 20 to 25 years. It's really because the access to the premium forms of wealth generation just aren't accessible to 99% of people. So we allow the minimum investment is just $100, and that's standard, and we think that's pretty accessible for most people. So yeah, so you select a product, decide how much you want to invest, and then select a contract duration, and there's a fixed yield. So for example, for the 6-month bond that we've launched, there's a 21% yield on that. So if I invested $100, I'm going to get paid $120 back, or $121 back in 6 months' time. So when you've done that, you can kind of, well, I don't have, I've connected to the wrong wallet, but once you've done that, you mint this. And what this does is it mints the sort of terms that you've just selected. That becomes the metadata for your NFT. So then you have this picture for proof NFT contract that represents your investment in, well, for us, it's New Fund, but we're offering this now to other projects and products. So really, the simplest way of describing it is we're trying to bring NFT technology, but for the asset management and investment industry. It's a massive industry, and we think it's kind of ripe for innovation and to be disrupted by what's happening in Web3 and blockchain. So that's where we started. And we do a couple of other things that sort of explains how it works, but I don't want to get too complicated off the bat. So yeah, that's a sort of a brief overview of what we've been working on from the NFT side of things.
Yeah, this is really cool. So I think we should jump into explaining how the yield works. Like, where does the yield come from, and how do you guarantee these rates?
Absolutely. I'll just switch to our our website. So if anyone is interested, this is it's currently live. So this is how we're generating the yield on our bonds. But one of the things that, this is why we started off with this, the People's Hedge Fund tagline is offering people, access to yield generating systems and tools that they just wouldn't normally have access to. So one of those, and maybe for people who do know, is arbitrage. And arbitrage is a very low risk way of making money in volatile markets. You buy one asset on one exchange and sell it on the other, and you profit off of the difference in price. Now, for sort of entry level traders or people who are trying to build their own trading algorithms, you can do okay, but you're really fighting an uphill battle. So you need to have a bit of an institutional kind of backing and really high quality people developing and maintaining these systems. So we've started by building our first trading fund, and that's called New A1. And this is a 23% APY currently for the backtesting that we're doing. And it's incredibly low risk. So kind of these graphs do a decent job of showing you kind of if you were to invest $1 million, what it would now be worth. But as you can see, then the graph doesn't go down. And that's one of the things we're most proud of with this first trading fund product, is how low we've been able to get the risk. This is kind of showing performance of Bitcoin recently. Obviously did pretty well, then did super well, and now has really not done too well. So, this is a volatile asset, and then compared to a structured trading product with very low risk, you can kind of see that if you were to invest for a long period of time in something that doesn't really lose you money, the exponential side of that really grows your stack. So I've explained what arbitrage is and how it works. And normally, you would buy Bitcoin on one exchange and then have to move it to the other exchange and sell it. And you're hoping by the time you've done all of that, the price hasn't moved, or the discrepancy hasn't gone, and you can actually make a bit of profit. What we do, and what the guy who's built this system, and he's a very talented kind of developer who's been around the block and has done this before, it uses funding rate arbitrage. So I don't know if we've got any trading enthusiasts who are listening in, who understand what I'm going to be talking about. But in the simplest terms, there are three types of markets on exchanges, on most exchanges. You have the spot market, which is where you can basically just buy and sell at the current price. You have futures markets, where you can speculate on the future price. And then you have perpetuals markets. And perpetuals markets are newer, and they're kind of almost solely in crypto. But one of the instruments that makes the perpetuals market work is this thing called funding rate. And what funding rate does is you basically, one side will pay the other and the other side will pay the other. And that's an arbitrageable opportunity. So we hold stable coins, and that's what gives it such low risk. So we basically trade with USDT and USDC, and we exploit discrepancies in the funding rates across different exchanges. So currently we're up and running on, I think, 4 exchanges. And we're just using our own kind of accounts for trading purposes, just to get live testing data and back testing data and building out of our reporting system, which will go into the dApp. But the plan is, and what we're currently doing is we're partnering with FalconX, who are an institutional kind of access provider. So we'll have access to all the different exchanges, and that will really hopefully grow the profitability of the strategy. So yeah, we basically exploit funding rate arbitrage opportunities across different exchanges, and that generates yield. So it's actual, this is not yield that's generated from tokenomics, which is often the case. You see these outlandish APYs on staking rewards, but it's basically just, I'm not going to say Ponzi scheme, but Ponzinomics. Some people would be getting familiar with that and how that works. So we're interested in really sort of generating proper yield from trading. And this is the first product. It's the A1. It's going to be live soon. So people who are interested in this, kind of join our Discord or check out the website. You can contact us for any kind of more information. There's a prospectus available at the moment, which you can download. So really kind of the headline is it's 23% APY generated from actual trading strategies with incredibly low risk. And the way how, the means by which to access this kind of fund, which is very different to what, the normal way of doing things, is by minting your kind of A1 NFT when it goes live using the sort of system I was just showing you here. So yeah, that's what we're doing at the moment in terms of generating yield. And what we're hoping to do long term is really grow New into more of a marketplace for investment services in crypto or using crypto. So we have our bond offering, and we're now going to allow existing crypto projects to offer bonds. So if anyone's listening in who runs a project and thinks, oh, that'd be cool if we could raise some liquidity via a structured bond offering, we're going to be allowing projects that exist to offer bonds. We're also looking for similarly like-minded traders and people who are building their own trading strategies who want to really offer their skills and their services to people regardless of the wealth that they have to hand. So that's the system that we built out so far. And the final thing that we're working on is new ventures, and that will be hopefully coming towards the end of the year. A bit like crowdfunding, but sort of allowing people to invest in new projects and new systems, and those will all be your investment will be held as an NFT, which gives you lots of different secondary play opportunities, especially what's happening with like collateralization of NFTs. You can technically mint an investment contract and then take it to a collateral provider and then get your liquidity back. So really exciting space to be in. That's why I'm really enjoying kind of working in Web3 and crypto. And yeah, that's sort of what we've been up to so far. Yeah.
Yeah, that was a fantastic presentation. I think that Warren Buffett quote you guys put up is hilarious.
Yeah.
And I
Yeah.
totally think it's fair to say that a lot of the ludicrous yields were very Ponzi.
Yeah.
I was listening to Mark Richardson from Bancor recently on a podcast, and he was saying he thinks we're going to see a total narrative shift from these ludicrous yields, and people are going to be more focused on sustainable yields that make a lot more sense rather than just a yield that causes a token price crash. Anyway, so I want to jump back into the bonds. So on the landing page for your dApp, you had the smart bond and the A1 bond, correct?
Yeah.
So would it be
Yes.
that the A1 bond is going to be using this arbitrage method once that's all like finished testing, and then is the smart bond yield generated a different way, or?
So basically, when the A1 is when that's live, that will be rather than being a bond, it's a fund. So you can mint basically your investment contract in the fund with an NFT, and all of the smart contract side of things is ready to go. What we're waiting on is licenses for us to be able to use Falcon X, have institutional access, which means that we can trade at lower fee tiers on behalf of our investors. So we have a couple of things to wait for in order to sort of get this fully operational. But the strategies have been built, and we're running those now live on like I was saying on 4 accounts across. I think at the moment it's Bitfinex, Bybit, Kraken, and FTX. I think are the exchanges we're trading on at the moment, and that's how we're generating the yield for the bonds. So there's some different options for the bonds. Like I said, because we started off by going sort of, we're not going to have a token. The only means by which for us to sort of raise our initial liquidity to support the development of the project was through this bond mechanism that we built out. So as you can see on, if you can go on the dApp at the moment, there's 3 different options for the bonds. There's a 3-month bond, a 6-month bond, and a 2-year bond. The 3 and the 6 month have less available supply. Some of them have sold out. They're all still available. So people can currently mint, 10% yield for the next 3 months. And we generate that yield just by, the trading strategies that we are testing and running on our own accounts. So that's how that's working at the moment. But really the sort of the underlying value of the bonds, we think, is probably not just using it for our own sake. It's a new mechanism for crypto projects to be able to kind of gather liquidity in a way that protects the investor. So if you imagine, I'm an investor and I like a certain project. At the moment, maybe the crypto project has an NFT, that's how they get the value, or they have a token. But both of those things, if you're too late, you can suffer from impermanent loss. If you enter in and you like the project, but you're buying at the top of the market, then you see, as most of us have all seen, kind of that 80 to 90% drawdown on your investment. So this is designed to really be a kind of third way for crypto projects to raise liquidity to really help and grow their protocol or their project, and offer more kind of protection to investors and simplify the process of investing in a certain project. So we're partnering with a handful of DeFi projects to start with, who will be able to offer a bond because they're able to generate yield. The yield generation will be done by them, but the sort of means by which someone can invest with them is simplified down to the fact that they just have to mint a bond and there's a fixed yield, and at the end of that period they get their investment plus the yield back. So we think it's sort of a really interesting tool, and this is what we're going to be submitting for the hackathon. The Polygon the summer hackathon. So this is our kind of our submission for that. We're going to go in the NFT track and see how we do. We think it's pretty innovative and pioneering of sort of being able to use NFTs for a financial use case. And a bond being a very simple contractual agreement, it's made the sort of development of the smart contract system and how it all works fairly simple, but that's what we're going to be doing. So this is coming pretty soon to projects on Polygon, and we're partnering with projects now who will start being able to offer bonds through us to their investors and their communities.
Yeah, awesome. That's really exciting. I think you guys are gonna do great in the hackathon, and I'm really excited to hear more about these partnerships. I'm realizing that our AMA is actually overlapping with like another
Sure.
Polygon event, so we'll definitely have to do this again sometime and like catch up on all the partnerships and all the new features you guys are rolling out and hear about how the arbitrage testing goes, everything.
Yeah,
Um,
no, absolutely. I'd love to come back. We've started off building on Polygon. We really love Polygon as a network. Um, One of the things that was key for us was sort of because we allow the users to mint the NFT. We're putting sort of the ability to mint a contract into the hands of a user, the low cost side of things. So you can mint a contract, an NFT with us, and it costs, I think, 3 cents worth of Matic. So yeah, the scalability and kind of the low cost that Polygon provides has been fantastic. And I think I had a conversation today with the team, and we're going to be running a sort of Polygon London Guild event soon. Hasn't been one yet, so I'm taking the lead on that. And hopefully, if anyone is based in London or wants to get in touch and sort of get involved in that, we're going to be running that over the next couple of months. So yeah, really excited to be on Polygon. It's a fantastic network, as we all know. So yeah, thanks for having us, and
yeah,
we'd love to come
well, I
back and
mean,
keep everyone updated.
if there's still more stuff you want to talk about, we still have a good amount of time left that we could use if you'd like to. And yeah, that's really exciting about the Polygon London Guild getting started. I'm actually a part of the Polygon Toronto Guild, so
Nice.
I really
Cool.
like seeing that whole Polygon Guild initiative kick off.
Yeah.
So for the listeners, Polygon guilds, if there's not one in your area, something you could look into is kickstarting your own Polygon guild. Um, but yeah, let's jump back to new. Is there anything else that you want to talk about that we haven't touched on already?
Um, I'd love to kind of like open up to questions if anyone has any who's listening in who like, or can people not speak? Is there like a voice chat where people can ask questions? Or yeah.
So I've let people unmute themselves before in the past, but it got really chaotic because everyone could
Okay.
just talk openly. So we asked people to drop their questions in the voice chat text channel, or there's a text channel that Discord just recently added text channels to the voice channel, so you can drop them in there too. Um, I've dropped your website link, your Discord link, and your Twitter account
Yeah.
all in the text channel. That's the best place to follow up with you guys?
Yeah, absolutely. That's we're kind of a developer first team, I would say. So anyone who's interested in kind of helping grow the community or has ideas for the project, we're really open to that, and we want to sort of be building a good community around what we are building. So yeah, feel free to kind of reach us on there, or you can even add me, and I'm more than happy to have a chat with people.
Perfect. Um, well, while we wait for some questions to come in, I'll ask a few. What's it been like for you guys building through the bear market? Because I understand you guys were kind of brainstorming this while the market was doing a lot better.
Yeah,
How's the bear market been for you, and what advice would you give to other teams building in it?
it's a good question, and I think when a lot of people get into crypto or want to start a crypto project, there's greed involved to some degree. People see the money that's in crypto and what could be done and what could be made, and it's easy for you to get ahead of yourself in that respect. So when a bear market does come around, everyone's kind of brought back down to earth and humbled, and lots of things, projects collapse and go wrong. Um, so you have to be willing to sacrifice. Unfortunately, we've got a great team of guys who are just, really passionate about what we're building and the ethos of the company and kind of the direction that we're going. Um, but they've had to make, huge personal sacrifices in some sense. People aren't getting paid or working for free. So you really need to believe in what you're building. And I think that's one of the blessings of a bear market, is that it gets rid of all the protocols and projects that were simply there to either be a rug pull or uh, just there to make money off of other people. So it's good. It resets the market in a sense. But yeah, you do have to be willing to make a lot of kind of personal sacrifices in these times. And especially for people who've been in the space and maybe made some money recently and thought they were now kind of set up. It's been difficult times, I would say, especially to launch a new business in this market. But in some ways, it's been good. It means that everyone's very focused on building and development of new ideas and new products. And so, yeah, sometimes not having so much money at your disposal can be a blessing, but it's difficult. It's definitely difficult as a kind of entrepreneur in the space. It hits hard, and you have to make some kind of really difficult decisions.
I think that was some really good advice you gave there, regarding the human emotion, greed. Um, I think it's really important for teams to not build out of greed and the desire for money, but rather build something that will provide impact and value. And doing that, you're going to end up likely making more money that way, anyways, and lasting longer as a project. So it's definitely the way to go about things.
Yeah.
My next question for you would be regarding plans for the future, like your medium to long term plans. Where do you see yourself like 6 months to a year from now? I know you mentioned some upcoming partnerships. Is there anything else you want to?
Yeah, so it's great, and this has been one of the kind of things of um, one of my jobs as sort of being the CEO is to try and get capital in, investment in for the idea and what we're building. And we spoke to some VCs, crypto VCs, and exchanges. They now have venture divisions, and the feedback we got was very helpful. It was more sort of, in Web3, you can't just come in and say we're going to do our own thing. And if you do that, you're fighting an uphill battle. So it's been about pivoting now and trying to think, okay, with what we're building out, how can we be more of an ecosystem beneficiary? How do we help other projects, or how do we kind of be more of a kind of core layer infrastructure, or the tech is the important part, and then you offer it to projects. So that's why we now want to offer our bond technology to projects who want to use it. The funds side of things, we're building out sort of reporting systems that can theoretically plug and play into other people's funds. Or if you're a trader and you've got a strategy and you want to, raise some capital and trade for other people, we're building out that system. So yeah, it's helped us reset and rethink and sort of think more long term about scaling this and bringing more people in and more projects and getting other people involved. So that's been a great kind of lesson, I think, for all of us. And yeah, in terms of what we're planning for the future, the dApp in its current state is probably going to be changing quite a lot in the next 3 to 6 months. Like I said, we're shifting more now towards a marketplace model, which I think is something that could be really valuable for DeFi. It's very fragmented. There's lots of great opportunities, but they're kind of dotted all over the place, and there's no one sort of one-stop shop where you can easily access all sorts of different, crypto yield generating methods or investment products or new ventures. So We're really looking to build out now a marketplace for investment services on the blockchain, starting with kind of the bonds that we've built out and partner with people who want to offer bonds. Then sort of the fund stuff, which we've been building out for our own fund, the A1 fund, giving that technology away to other people and sort of building this marketplace where you can access, venture capital or another trading system. So that's of interest. And then ventures is another one. Sort of how can we help people who are like us 6 months ago who have an idea but can't raise the capital or need a bit of capital to sort of get their idea off the ground, and connect those people with like-minded investors. And those investments are then NFT investments, which people can sort of trade or collateralize or do whatever they want to with them. But it's an on-chain proof of investment, and that's really exciting, and that's what's kind of driving us forward at the moment. So yeah, transition to a marketplace, lots of new projects probably offering through us and on the platform, and seeing how far we can take it, because we think there's lots to be done, and yeah, we're here to stay.
Yeah, this is really exciting, Tom. I think you guys have a very powerful kind of like brand statement or mission statement going on. And I think that opening up the doors for individual traders to um, share their trading strategies with people, I think that will be something that helps to drive a lot of adoption to your dApp alongside the partnerships as well. So yeah, this is all very exciting to me. I love what you guys are building.
Thank you. No, it's that's nice to hear.
All right, guys. While we have Tom here, is there any questions you want to ask him about his exciting dApp that is being built out? Drop him in the text channel if you do. I guess one more question I could ask, because we did talk about how you guys don't have a token. Would there be
Yeah.
any plans for a token in the future? And if so, like what would the utility of it be? Would it be tied in with some form of governance? Would there be any plans for that?
Yeah, so we have decided that, sort of transitioning towards this marketplace model now gives us the ability to offer a token with utility. That's one of the things I love about this company, is we don't do things unless there's kind of utility or actual benefit behind it. So yeah, it will be a marketplace token. So token holders will, some of the sort of fees which we generate from offering these services, be used for a buyback and burn. So it's a deflationary kind of tokenomics. And the other thing that we can do with it is sort of dividend payments. So share of profits of the fees that the marketplace generates. So obviously we're really small right now, and we've kind of only got our own 2 products. But for people who can see the vision of, a decentralized marketplace for investment products and financial services, the fees that can potentially generate long term are, we think, massive. So that will really benefit token holders. So we're raising capital via 2 private rounds before we then go back to our VC friends and raise the institutional round. So yeah, for people who are interested and have who like investing in private sales, we are raising for our private sale at the moment. So yeah, the plan is to integrate some tokenomics into this kind of marketplace that we're currently developing.
Awesome. You shared so much alpha information today. So very appreciative of that, and very grateful to have you here as a guest today.
No worries. No, thanks for having me, and hopefully I'll be back soon. Like I said, we're enjoying kind of being part of the Polygon ecosystem, and we're in London. Some of us are based in Croatia, so we're both sides of that are setting up the sort of guilds there and trying to really integrate ourselves into the ecosystem as much as possible. So I'm sure we'll be back at some point, and yeah, it's been really good to come on.
Yeah, anytime you deem it appropriate, let's get it into the schedule. This has been a ton of fun. So anytime you want, let's do it.
Fantastic.
Okay,
Well, thanks a lot, guys.
yeah, it's great meeting you. Thanks everybody for coming out, and I hope you all have an awesome weekend.
Yeah, cheers, guys. Have a good weekend.